Hello, guys, and good evening. We are here again to revise property income. Right now, the revision part specifically pertains to individuals and not companies. Companies, we'll get into that later. Today, we'll be revising property income and then we'll be taking up trading income. Property income, there are certain aspects of property income actually which help us build other concepts later. Like, for example, there is an application in pensions, there's an application elsewhere. So, let's have a quick recap of how property income is assessed for an individual. Now, if I were to classify property income, I would say, of course, this is income from setting up a rental on a house property, but that's not all. There are primarily four categories of rental property incomes that we are looking at. There is rental income under any lease or tenancy agreement, less allowable expenses. Now, when I say rental income under any lease or tenancy agreement, if a person gives out his premises on rent, that is basically covered under this subhead. Then premium received on the grant of a short lease, we'll see that quickly. Then profits arising from the commercial letting of a furnished holiday accommodation. This is a feature that is unique to UK taxation and again deserves a special discussion because it has a connection with pensions and rental income received under the rent a room scheme. Now, when we talk about property income, these are the four primary heads: rental income under regular leases, then premium received on the grant of a short lease, profits arising from commercial letting of a furnished holiday accommodation, and rental income received under a rent-a-room scheme. Now, the basis of assessment for an individual or a partnership firm is so it's treated as if it's profits of a single trade. And how exactly do we calculate rental income? It is rental income from all properties minus related expenses. There is a list of expenses that is allowed to be deducted. Now, what is a deduction? A deduction is an amount that you subtract from total income to arrive at taxable income. The amount that is usually allowed as a deduction has to be necessarily related to that particular activity. ठीक है? Like in employment income, any expense that you incur for what purpose? Any expense that you incur in the completion of your employment responsibilities is allowed as a deduction. But if that expense is not wholly, exclusively, and necessarily related with employment, it is not allowed as a deduction. Similarly, in case of property income, that expense, the category of expenses that we are going to see, they are exclusively connected with that particular property. Expenses related to maintenance of property and a whole set of categories, but there has to be a nexus with the underlying property. Okay. Now, rental income is assessed on a cash basis. That is, rental income actually received during the tax year is subjected to tax. So, unless you cross a particular threshold, rental income in case of an individual is assessable on cash basis. Amount received is subjected to tax, no accrual. The related expenses are deductible on a cash basis. When I say related expenses are deductible on a cash basis, again, only those expenses which are actually paid are allowed as a deduction. If you have recorded an entry rent expense account debit to rent payable, then it is not allowed as a deduction. Alternatively, the taxpayer can elect to be assessed on an accrual basis, that is rental income earned less related expenses. When I say elect to be assessed on an accrual basis, so what election is made when you already have a default option. The default setting is cash basis. You can choose accrual basis if you want, but if the taxpayer's gross annual rent exceeds 1,50,000, the accrual basis must be used. Okay. Now, uh, the moment it crosses 1,50,000, you don't have a choice. Then the rental income will be assessed on accrual. Property income in case of a company is always assessed on an accrual basis. Now, there is a consistency expectation in case of rental income. What does that mean? If the landlord has if he has four properties, he is assessing or he's subjecting the income from two properties to tax on cash basis. Then he has to use the cash basis for all properties. Or if he chooses the accrual basis, then accrual basis for all properties. You cannot have cash basis for some and accrual basis for the others. There has to be a consistency there. And it is also possible in certain circumstances for unincorporated businesses, that is, sole traders or partnership businesses, to elect to calculate trading profit under cash basis. ये बाद में देखेंगे when we see trading income. If an individual runs a trading business and a property business, there is no need to choose the same basis of assessment. That is also fine, which means there is choice, there is discretion. Property income is non-savings income. Okay, we have seen three categories: non-savings, savings, dividend. This is non-savings income. Now, what are the expenses that are allowed to be deducted? Pay attention. Should be incurred wholly and exclusively for property business. So rental business is treated as a separate business here. Okay. Insurance of property is allowed as a deduction from total rental income. Then agent fees and other management expenses, you have appointed an agent to basically help you put the property on rent to others, or other property management expenses. They are allowed. Repairs are also allowed. Interest on loan to acquire or improve property, we'll discuss this separately. And irrecoverable debts are allowed only under accrual basis. So, five items: insurance expense, agent fees and other management expense, then repairs, then interest on loan to acquire or improve property, and irrecoverable debts. Out of which, these items: insurance, self-explanatory, property insurance. Agent fees and other management expenses, you appoint a broker for letting out the property, allowed. Then repair to property, allowed. Bad debts, allowed under accrual. This is something which is new. Interest on loan to acquire property. We'll see what that is. Okay. And if property is occupied for part of the year by the owner, any expenses relating to private use will not be allowed as a deduction. What does that mean? If the property was let out for 8 months and owner occupied the property for 4 months, okay, and the total repair expense is 12,000, then out of that 12,000, 8,000 will be allowed and 4,000 will be disallowed. The proportionate part which relates to owner's presence in the property is not allowed as a deduction. This is an inclusive list. So expenses similar to above 5 will also be allowed. What does that mean? This is an inclusive list. If there are other expenses which are wholly and exclusively incurred for property business, and if they have a similar feature, then they will be allowed as a deduction. Now, if property is given but not at full rent, for example, I have given the property to my sister to stay in, and I have told her that the regular market rent is 80,000, but you pay only 20,000. So I have given it on 25% of the commercial rent. So amount of expense that would be allowed as a deduction is also 25%. Because I'm not charging full rent on property, I'm not allowed to claim the entire amount as a deduction. Okay. Now, in case of property business, there are the deduction for capital expenditure is given in a very different way. What is capital expenditure? First of all, any non-current asset that you utilize in the running of the property business. Okay. So for example, something like a car. My only business is giving properties on rent. I have 7, 8 properties all across Mumbai, and I have a car which is used only for property business purpose. I sit in the car, I drive to all these locations, inspect the property, talk to tenants, collect cash, do maintenance, all of that. So we are talking about those type of assets, or any cleaning equipment that I have in place, or a fire extinguisher that I have in place. All of these are capital expenditures. Now, what is allowed? Equipment for maintenance of property. Now, what is equipment for maintenance of property? India may, of course, you won't see that so much, but in the United Kingdom, I think they have a lot of love for their gardens, right? They keep their gardens properly trimmed and pruned and clean and all of that. And there's a lawnmower and all of these items basically. So when we are talking about all of these items, the one thought that comes to my mind is these are assets which are necessary for maintenance of the property, for running the property. Correct. So if I purchase a lawnmower, it is only for keeping the property neat and tidy. That is equipment for maintenance of property. Or, uh, for example, I purchase a fire extinguisher, or I install a lift in the property, right? These are equipment for running the property business. The entire amount is allowed as a deduction. Nothing like depreciation. Claim the entire amount as a deduction. If I purchase a lawnmower for 5,000 pounds, claim that as a deduction. If I purchase some other device for cleaning and all of that, claim that entire amount as a deduction. ठीक है. So entire cash paid to acquire that asset is allowed as a deduction. This is a little different. This is a little difficult for us to digest because since childhood we have been reared on the idea of depreciation, that you purchase a capital asset and divide by useful life. Here, for equipment for maintenance of property and equipment for running the property business, whatever expenditure you incur, that will be allowed as a deduction in one go, not in installments. Okay. And what is not allowed? Expenditure for improvement of property. Say, for example, there is a balcony and I need to construct, maybe, I need to install a fan in the balcony, or I need to, put like a shed on the balcony, something like that. That is expenditure for improvement of property, not allowed, because this will be allowed later in capital gains as a deduction. Then cars used, again not allowed. Cars will behave separately in all heads. सिर्फ इस हेड में नहीं, सारे हेड्स में cars will behave separately if as you observe later. And assets provided for use in residential property. Now, when I moved into my apartment in Delhi, there was a refrigerator, there was a geyser, there were 10 other devices which were already provided in the residential property. I did not have to purchase. The landlord himself gave me the fridge and the geyser and everything. These are assets for use in residential property. This is also not allowed as a deduction. There is some special thing that we are going to observe here. Assets for use in residential property. We'll come to that in some time. But for now, remember, equipment for maintenance of property, equipment for running the property business. These are the two amounts which are allowed as a deduction. Okay. Assets like geyser, AC, sofa, these are assets we include in residential property. ठीक है. अब this capital expenditure could be considered on a cash basis, in which case full capital expenditure is allowed as and when incurred. When you pay, you get a deduction. ठीक है. And then you have the accrual basis. What is accrual basis? In accrual basis, capital allowances can be claimed. Like we have depreciation in financial reporting, we have depreciation in income tax laws is called as capital allowances. That is the word they use. Their approach of calculating depreciation is different, right? In When we do in financial reporting, we consider residual value, we consider useful life, then we apply a formula, and then we arrive at a rate. Here they have their own rates, they have their own methods of calculating depreciation, and income tax guys, according to them, they for depreciation they use the word capital allowance. What are capital allowances? Depreciation calculated as per rates prescribed in income tax laws. And then of course we will discuss this later in trading income. Okay. What is capital allowance? It is income tax ka depreciation in very simple terms. So if you purchase an asset worth 1 lakh on which the capital allowance rate is 18,000, then you will claim 18%, then you will claim 18,000 as a deduction. ठीक है. जैसे in our P&L account, we write 10,000 as depreciation, for example. Here the rate is 18%. We apply the 18% rate. Okay. So if you are using the accrual basis for property business, then you will claim capital allowances. If you are using the cash basis, full capital expenditure will be allowed as a deduction. The thing about cars is different. Okay. Cars, one of the two can be claimed at taxpayer's discretion, not both. Capital allowances of the car, calculate your capital allowance, that is income tax ka depreciation as per the rates given, or you can claim approved mileage allowance payments. Now, what are approved mileage allowance payments? Now, HMRC says that if you travel a distance of so many kilometers, for example, if you travel a distance of so many kilometers, you will get, our assumption is if you travel 100 kilometers, for example, you will incur a cost of 20 per kilometer. Just quoting an example. So that much amount will be allowed as a deduction. Now, what are the AMAP rates? They are given in the exam. And for the first 10,000 kilometers, or is it miles? What is it? Kilometers. It's not miles. Okay. For the first 10,000 kilometers, 45 pence per kilometer. Right. And above 10,000 kilometers, 25 pence per kilometer. Is that correct? These are the approved mileage allowance payment rates, which means if your car has traveled 11,000 kilometers. How will you get the AMAP deduction? First 10,000. So 10,000 pay $0.45, sorry, pounds, plus remaining 1,000 above 10,000 pay 0.25. 11,000 into 0.45. Sorry, 10,000 into 0.45 plus 1,000 into 0.25. You will be allowed to claim a deduction of 4750. Where are these numbers given? These are given to you in the tax rates that are given in the tax rate ka table. Okay. So if you are using a car, either claim capital allowances on the car or claim approved mileage allowance payments, one of the two. Actual motoring cost, petrol and insurance, this is not allowed as a deduction. So actual amount incurred will never be allowed as a deduction with respect to car. You could either claim capital allowances, which is depreciation as per income tax, or you could use this approved mileage allowance payments, AMAP. Okay. Either this or this, nothing else. Okay. Now, say I'm talking of Godrej Properties. They have lots of projects running in Mumbai. And I'm thinking from the company's point of view. Okay, there are three projects which the company has completed in Mumbai. There is a site manager who has to travel to each of these properties every day for inspection and for other work also. He uses the company car to commute for the purpose of property rentals, and the car travels 8,000 miles. So up to 10,000 miles. Sorry, not it's not kilometers, it's miles. Up to first 10,000 miles, 45 pence per mile. And then above that, 25 pence per mile. So when he travels 10,000 miles or 8,000 miles or whatever it is, that into 0.45 will be allowed as a deduction. So 8,000 miles was the traveling for property business purpose. 8,000 into 0.45, whatever is the amount, that will be allowed as a deduction. Or you could claim the entire amount paid अंडर अदर बाकी असेट्स के केस में तो यू कैन क्लेम द एंटायर अमाउंट पेड एज अ डिडक्शन कार के केस में यू कैन क्लेम ईदर एएमएपी रेट्स और you can claim capital allowances. These capital allowances for car is always 18%. The rate will be given to you in the paper. Are you with me so far? Okay. Now, let's talk about replacement domestic item relief. So what items are we talking about? We are talking about items like fridge, geyser, table, chair in the house. ठीक है? Assets provided for use in the residential property. The original purchase cost is not allowed as a deduction. So my landlady purchased this flat, and when she, before giving the flat on rent, she purchased an AC, she purchased a fridge, she purchased a geyser for total of 2 lakh rupees. Okay. First expenditure is not allowed as a deduction. Original purchase, no deduction. But later, if you are trying to replace the item, okay. So she purchased an AC in 2022. She used the flat, used it for 5 years. In 2027, the AC broke down. So now the old AC has to be replaced by a new AC. Expenditure incurred on replacement asset is allowed as a deduction. Okay. And what is the amount of deduction? Replacement cost minus proceeds from the disposal of the item. So the original AC was for 50,000. She purchased a new AC for 60,000. The replacement cost will be allowed as a deduction while calculating taxable income. ठीक है and this relief is replacement cost limited to cost of similar item excluding improvement but modern equivalent allowed like older ACs were say for example those window ACs and now window ACs ka manufacturing has stopped and you only have the split ACs these days so modern equivalent is okay uh, but you cannot improve over the AC. Like, you cannot replace a floppy with a CD because it's a completely different item altogether. है ना? And should be items acquired for domestic use only. What is not allowed? Relief is not allowed for fixtures and fittings. Fixtures fixed to a dwelling, like boilers and radiators, these are excluded. So, Antara will be able to assert this fact. I'm sure you have these Central heating and all of that, because it's very cold, right?
Yes, sir, right.
So the way we have water pipes, do you have like a heating system that way? Or how?
Yeah, yeah, yeah. There are pipes like heating and it's centralized.
Okay, okay. So that's keep the houses warm because it gets really cold there. So these items which are fixed to a building, they are not allowed as a deduction. Okay. And the relief is not available for furnished holiday accommodation and for rent room relief. What is FHA? What is rent room relief? We'll see. Be it cash basis or accrual basis, the entire amount of replacement domestic item relief is allowed as a deduction. So basically, what we are saying is first AC you purchase, no deduction. Then you replace the AC with another AC, that is allowed as a deduction. So first time when you purchase, no deduction. You replace the AC with a new AC of 60,000, that 60,000 will be allowed as a deduction. Okay. Have a quick look at this example. Okay. So this is how the replacement domestic item relief works. Now, I want us to do this question, but we'll come to the questions part later. Let's get through the provisions first. This is relief for financing cost. Okay. Interest paid on the loan to acquire property or equipment to run the property business is allowed as a deduction. So you acquire property or you acquire equipment to run the property business, that is allowed as a deduction. ठीक है. Relief is not given for owners of residential property who live in the property themselves. They don't get a deduction. But relief is given to owners of buy to let residential properties who have rented out the property. What are buy to let residential properties? Like I am in Mumbai, I purchase a property, I give it on rent to someone, and I live in my house in Noida. So if I have taken a loan for that property in which a tenant is staying, I am not staying. If a tenant is staying in that property, then I get the financing cost relief. How is relief calculated? Amount of interest or finance cost into 20%. ठीक है? Whatever is the finance cost into 20%, deduct the amount of relief from tax payable. So here you are not deducting this from total income. You are deducting this from tax payable. ठीक है? And what is finance cost? Interest plus incidental cost of borrowing. ठीक है? So processing fees and all of that will also be included. When you deduct from total income to arrive at taxable income, it is called deduction. Like total sale 10 lakh, purchase cost 4 lakh, that is a deduction. You are subtracting something from total income to arrive at taxable income. When you reduce the amount of tax payable, that reduction is called relief. ठीक है? And if you have taken a loan to buy a residential property and you let out that residential property to someone, then amount of interest into 20% is what is allowed as a deduction. Remember one thing, here you will not get any deduction if you yourself are living in that property. You will get a deduction only if you have given that property on rent to someone else. ठीक है? Have a look at the flowchart once, and this is not applicable for companies, commercial properties, and furnished holiday accommodation.
So is it called relief because the amount is adjusted from the tax amount?
Yes. Ideally, that is how the nomenclature should be, but in capital gains, na, फिर कहीं कहीं पे they use a different nomenclature also. But ideally, that is what relief means.
Right.
ठीक है? चलो. Now, rent a room relief. This rent a room relief, is like how people who are staying in PGs and all, like typical PGs, okay. There's a 4 bedroom apartment. The landlord and his family live in 3 rooms and they have given you 1 room to stay in. This is, like they have a 3 bedroom flat, and on the second floor, they have constructed 1 room where college going students stay. Or the same entrance. Three rooms they stay, one room another person stays. So the landlord continues to stay in that premises and he has given one room on rent to someone. That is rent a room wala situation. Okay. When an individual lets furnished accommodation in the individual's main residence, a special exemption applies. Like other property income, rent a room is dealt with under cash basis. If the gross annual receipts are 7,500 or below, the income will be exempt from tax, and the individual can elect to ignore the exemption for that year if a loss is incurred. What does that mean? If the total income is 7,500 or less, don't subject the income to tax. But if there is a loss in the picture, let's see how that is dealt with. Okay. If an income is offered to tax, you can claim expense as a deduction. If an income is treated as exempt, then any expense incurred to earn that income will also not be allowed as a deduction. Common sense wala baat hai, matching principle wala baat hai. Correct? If income is credited to P&L and considered as income, then expense incurred to earn that income should also be considered. But if the income is treated as exempt, this is like taking double advantage of the situation. On one hand, you are claiming the income as exempt, and on the other hand, you are saying, nahi, nahi, expense that I incurred to earn this income, I will debit it. That is not allowed. Okay. Just give me one moment, guys. You read the scenario, give me one moment. Okay. So if gross rent is 4,000, actual rent income is 4,000, expenses 3,000. 1,000 is the net income. Ignore the gross rent. Treat income as exempt income. ठीक है. Gross rent is 4,000. Expense incurred is 5,000. There is a loss of 1,000. Ignore the exemption, claim the loss. So they are giving you that choice. You can ignore the exemption if loss is incurred and you can claim the loss. Normally, such election or such choice will not be available. But in case of property income, especially in rent or room relief, they are giving you this choice. If you want, you claim the exemption. If you don't want, you can ignore the exemption and claim the loss. ठीक है. If gross rent is 10,000 from letting out a room slash rooms in main residence, treatment 1, pay tax on amount in excess of 7,500. So 10,000 minus 7,500 is 2,500. Pay tax on this 2,500, no additional deductions allowed. ठीक है. Or you have a choice. See, choice to pay tax on total income normally. Total receipt 10,000, expense 6,000, rental income 4,000, net rental income, pay tax on 4,000. If I claim 7,500 relief, then I have to pay tax on 2,500 only. है ना? So, A, you have a choice. 10 minus 6, 4 पे tax pay करो या claim an exemption of 7,500, pay tax on 2,500, whatever you prefer. But imagine a situation where total receipts are 10,000 and expenses 9,000. You still have a choice to claim 7,500 ka exemption. But if you claim 7,500 rent a room relief, then you will have to pay tax on 10,000 minus 2,500 minus 7,500, that is 2,500. But if you go with the actual basis, then 10,000 minus 9,000 will be 1,000 and you will have to pay tax on 1,000. Okay. So in this case, claiming that 7,500 rent a room relief doesn't work in your favor. If you claim in this case, claiming that 7,500 rent a room relief works in your favor. So you will have to evaluate it on the basis of facts of the case. Here, is it helping me? Which of the two situations leads to a lower overall income and lower tax liability? I'll have to consider that. Okay. So treatment 1, treatment 2. Here again, where the gross receipt was less than 5,000, less than 7,500, here it was greater than 7,500. ठीक है. Have a look at the second one, treatment 1, treatment 2, दोनों देख लो एक बार.
So,
Hmm.
so can the taxpayer change this each year, or once it is done, then they have to?
I beg your pardon.
Sorry. So can the taxpayer change this each year when they are
Yeah,
calculating,
yeah.
or once they choose?
Yes, they
Okay.
can. They can. There are certain elections which once made are irrevocable. This is not one of those.
Okay.
हाँ. ठीक है, चलो, आर यू ऑल विथ मी? Now, one special situation which is furnished holiday accommodation. I mean, people living in Mumbai and all of these places, you go for weekend vacations to Lonavala and all, right? And there you have all these villas where you go and stay. These are fully furnished villas. There's a functional kitchen, there are ACs, there's everything. So that is a furnished holiday accommodation. We are basically talking about that kind of a system. How does a furnished holiday accommodation work? Furnished holiday accommodation, the property should be situated in the UK or EEA, furnished and let on a commercial basis. Or, sorry, or nahi. This is the first condition. Property has to be situated in UK or EEA. What is EEA? European Economic Area. है ना? Or, and it has to be let out on a commercial basis. It's fully furnished accommodation, which are basically, like holiday homes and villas that you are giving out on commercial rent. Then available for commercial letting as a holiday accommodation for not less than 210 days in a year, which means it should be available for letting for minimum 210 days. So out of 365 days, let's say for 150 days, the property was occupied by the family for whatever wedding, jo bhi tha. For the remaining days, see if it is available for more than 210 days or not. If it is available for more than 210 days and the second condition is fulfilled, then actually let out for at least 105 days in the year and normally not let for greater than 31 consecutive days to the same person. Now, this condition actually let out for at least 105 days in a year. There is a relaxation here, ठीक है? Where a taxpayer owns more than one property, the 105 days test is satisfied if the average number of days for which the properties are in for which the properties are let in the year is at least 105. ठीक है? Now, what does that mean? There is property 1 which was actually let out for 200 days, property 2 which was actually let out for 80 days, and property 3 which was actually let out for 145 days. Now, what is the average number of days for which the property was let out? 200 plus 80 plus 145 upon 3, which comes down to 142. So the property was actually let out on an average for 142 days. तीन property मिला के. If you observe, property 2 does not fulfill the 105 days wala condition. The days here are less than 105. But where a taxpayer owns more than one property, the 105 days test is satisfied if the average number of days for which the properties are let in the year is at least 105. Property is let out for at least 105 days in the year, and उसके लिए if you take the average of these three properties and if that comes to more than 105, then you will not exclude property 2, although it does not satisfy the condition. If on an average it is more than 105 days, property 2 will also get treated as a furnished holiday accommodation. Normally you wouldn't have. If the condition would have stopped here, then property 2 would not have been considered as furnished holiday accommodation. But here they have told where more than one property is owned, then take the average number of days for which it was actually let out. If the average number of days is more than 105, then all properties will qualify. ठीक है? And normally not let out for more than 31 consecutive days in the same to the same person. If during a 12-month period there are periods of letting to the same person in excess of 31 consecutive days, the aggregate of these long periods must not exceed 155. Tomorrow I decide, yeah, I'm done with Delhi. I want to move to the mountains for 2 months. So that's like living there for a period of 60 days. ठीक है? So वैसे तो it exceeds the 31 days wala condition. But see, the word here is normally, which means this is not hard and fast. There could be certain other circumstances when occupancy of greater than 31 days by the same person is allowed. So if during a 12-month period, there are days of letting to the same person in excess of 31, still the aggregate must not exceed 155. Four conditions: property situated in UK or EEA, available for commercial letting for at least 210 days, actually let out for at least 105 days, and normally not let for greater than 31 consecutive days to the same person. If these conditions are fulfilled, then it is a furnished holiday accommodation. And what is FHA income? Assessable as property income but treated as though profits arose from a separate trade. ठीक है. सो इसका जो ट्रीटमेंट है ना, दिस इज कंसिडर्ड एज अर्नड इनकम एंड नॉट इन्वेस्टमेंट इनकम. सो व्हेन वी डू पेंशंस वहां पे इसका एप्लीकेबिलिटी है अलग. So just FHA might be more helpful in pensions than it is in property income. But you should know what a furnished holiday accommodation is and use cash basis if gross rental income is less than 1,50,000 per annum. Losses from FHA cannot be set off against any other income. Losses from FHA can only be offset against profits from the same FHA. And so I have one property in Lonavala, one property in Mahabaleshwar. Okay. The Lonavala property loss can be adjusted only against the Lonavala property income, not against any other FHA. And UK FHA losses can be adjusted only against UK FHA income, and EEA FHA losses can be adjusted only against EEA FHA income, not against anything else. Okay. So this is the basic structure of furnished holiday accommodation. And one last set of principles that we need to revisit, that is property business losses. Property business loss can be adjusted, so it can be carried forward, by the way. If there is loss in a year, it can be carried forward to the next year. But property loss can be adjusted only against future property income. There is no time limit for which you can carry forward the property business losses. It can be carried forward indefinitely, but when you adjust it, the adjustment should be only against property income, not from income again, not from any other source of income. Okay. That is so that was furnished holiday accommodation. Now there is something known as a lease premium. So what happens is, if I take a long-term lease, or if I take a short-term lease, I sometimes I'm required to make a lump sum payment at the inception of the lease. ठीक है, 25 ईयर का लीज है. एवरी ईयर आई एम गोइंग टू पे 10,000, बट एट द बिगिनिंग ऑफ ईयर जीरो आई एम एक्सपेक्टेड टू पे some additional 8,000, for example, as a one time payment. How is this amount considered as, how how is the income from this source calculated under property income? ठीक है. Lease premium is a lump sum payment made by the tenant to the landlord in consideration of the granting of a lease. The receipt of a premium on the granting of a short lease, that is, lease ka duration is less than or equal to 50 years, has both income tax and CGT consequences. If it is a long lease, then it has an income. So long lease means a lease of time duration greater than 50. It has income tax consequence. It has no income tax consequences, but chargeable to capital gains. Okay. What is a short lease? A short lease is a lease for a period of 50 years or less. Part of a premium received on the grant of a short lease is treated as rental income in the tax year in which the lease is granted, whether the cash basis or accrual basis is used. So the landlord gets a lump sum amount from the tenant in this case, along with the regular rental income that is going to come his way. And how is this rent lump sum amount subjected to tax? It is calculated as premium received less premium into 2% into duration of lease minus 1. Duration of lease is number of complete years. Ignore parts of a year. So if it is 14 years, 8 months, you should take 14 years. ठीक है. How do you calculate the amount subject to property income? Premium received minus premium into 2% into duration of lease minus 1. या फिर premium into 51 minus n upon 50, where 51 is length of the lease in whole years. ठीक है. अब to avoid income tax, it would be a simple matter to grant a lease for over 50 years, but to give the landlord the right to end the lease before the expiry of 30 years. चालाक लोग तो ये सब कर सकते हैं. Anti-avoidance legislation provides that where the lease can be terminated at some time during the lease, the period of lease is taken to the earliest date on which the lease may be terminated. So, in order to avoid a lease, the landlord and the tenant could do something like, instead of making it a 45-year lease, which would subject it to, income tax consequences, they make it a 60-year lease but cancelable at the end of 45 years. So HMRC and tax authorities have also become smarter. What they are saying is, no, we'll not pay attention to that. For us, the duration of the lease is from the date the lease is granted till the date you get the right to cancel. So we are going to consider only that much period. Okay? Are you with me, all of you? And last one, real estate investment trust. What is real estate investment trust? People like you and me. बीच में just 3 days ago, I wanted to buy a share of a the semiconductor company, which does semiconductor chips ka business, Dixon Technologies or something like this. I checked the price per share. It was 18,000 something. I'm like, this much money I can't contribute in one go because it's very risky, purchasing one share of 18,000. So shareholders might not want to take the risk associated with a particular share. So what they do is they invest money via mutual funds. A mutual fund collects money from all of us and it uses that money to invest in shares. Similarly, a REIT or a real estate investment trust is like a mutual fund for properties. Now, I want to buy a property in South Bombay. बीच में there was this news item कि कुछ 720 crores में there was some property that was sold. Now, I also want to participate in the real estate boom, but because of my limited resources, I can't do it. So, what all five, six of us do is we create a vehicle called as real estate investment trust. Okay, all of us pool money into that trust. 50 lakh, 50 lakh, 60 lakh, 80 lakh, whatever. We accumulate 5 crores and we use that money to buy a posh apartment of 5 crores. Then we put the property on rent. Whatever rental income is earned is accumulated by the trust. If later on the property is sold, naturally that money also comes to the trust and then the trust distributes that money amongst us. Okay. So when the trust accumulates that income, later on the trust will transfer that amount to us in the form of a dividend. But it is not treated as dividend, it is treated as property income. So the property that we purchased for 5 crores, it earned a total rental income of, say, 50 lakhs. Now that 50 lakhs should be distributed amongst all of us in the ratio of our original contribution. Okay. But because this income is derived from a property, when the trust gives our share to us, we will call it property income. We will not call it like a dividend income. Okay, because it is property income earned by the trust on some asset and then that amount is getting redistributed to us, we will consider that as property income, tax it like non-savings income. Okay. And the income from a real estate investment trust is always assumed to be received net of 20% tax. What does that mean? If I have received 1200, this is after deducting 20% tax. So what is the original amount of income? Original amount of income will be 1200 divided by 80%. ठीक है यहाँ पे so if Tanvi receives 2400 from REIT, she receives 2400 from a real estate investment trust. How much would be her income? When your gross income is 100, you have tax deduction of 20 and your net receipts are 80. Here Tanvi received 2400. So by cross multiplication, we said that 2400 into 100 by 80. This is my gross income. So if somebody tells me that you receive 2400 from a real estate investment trust, gross it up, divide that by 80%, whatever value you get, that is your property income because of a real estate investment trust. ठीक है? अब एक बार ये read the part in blue properly. Tell me when you want me to scroll, okay?
So could you please scroll down?
Sure. ठीक है, ओके। क्वेश्चन कैन बी आस्क्ड फ्रॉम प्रॉपर्टी इनकम इन योर एग्जाम। ठीक है, चलो